Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about EMERGENT BIOSOLUTIONS INC quarterly report. EMERGENT BIOSOLUTIONS Inc. offers a wide range of life sciences products and services to combat public health threats. Their portfolio includes vaccines, Vaxchora cholera, Vivatif typhoid fever, Biothrax anthrax, ACAM2000 smallpox, TEMBXA smallpox disease, Ebanga Ebola medications, NARCAN nasal spray, opioid overdose, anthracite inhalational anthrax, Raxibacumab injection inhalational anthrax, botulism antitoxin heptavalent botulism, autoinjectors, Trobigard atropine sulfate obidoxime chloride, development and manufacturing services, plus contract development plus manufacturing of drug substance and product plus packaging plus technology transfer plus process and analytical development. The company is also developing new products to address emerging threats, including treatments for Lassa fever, Marburg virus disease, Sudan virus disease, and equine encephalitis virus infections. The significant increase in EMERGENT BIOSOLUTIONS Inc.'s stock price over the past year can be attributed to several key factors. The company's strong third quarter 2025 financial results and updated guidance were major contributors, with earnings per share beating analysts' estimates by a substantial margin and revenue exceeding expectations. EMERGENT BIOSOLUTIONS also raised its full-year 2025 guidance, indicating confidence in its future performance. This was further bolstered by growth in key product sales, including Narcan nasal spray and smallpox vaccines, as well as improved financial metrics such as gross margins and reduced operating expenses. New international government contracts and modifications, worth millions of dollars, also contributed to the stock price surge. Additionally, a shift in retail investor sentiment towards optimism and bullish views on the company's future prospects further fueled the increase. Overall, these positive developments have driven EMERGENT BIOSOLUTIONS stock price up by nearly 67% over the past 3 months, making it one of the most notable performers in the market. The primary drivers of revenue growth for this company can be attributed to several factors. A significant increase in services revenue by 10% contributed $39.8 million to the growth, while MCM products revenue saw an 11% rise, adding $83.8 million. Additionally, the sale of RSDL generated a $24.3 million gain, and development milestones related to CHIK VLP brought in $17.9 million. On the other hand, revenue decline was primarily driven by the discontinuation of prescription NARCAN due to the launch of OTC NARCAN, resulting in a loss of $46.8 million. Lower Canadian retail sales also contributed to the decline, amounting to $12.8 million. Furthermore, an unfavorable price and volume mix for NARCAN products in 2024 led to a decrease of $34 million. These factors highlight the key drivers behind the company's revenue growth and decline, providing insight into the dynamics that shape its financial performance. Net income and profit margins. A shift in performance. The financial performance of a company has undergone significant changes between Q3 2024 and Q3 2025. Net income decreased to $51.2 million, down from $114.8 million in the same period last year. However, on a year-to-date basis, net income increased to $107.2 million, a stark contrast to the -$159.3 million recorded in YTD 2024. Profit margins also experienced fluctuations. Net income margin decreased to 22.1% in Q3 2025 from 39.2% in Q3 2024, but improved to 18% on a year-to-date basis compared to -18.8%. Gross margin declined by $25.1 million to $119.8 million, while segment-adjusted gross margin decreased by 53% to $84.4 million. The reasons behind these changes are multifaceted and include impairment charges, restructuring costs, and shifts in revenue or expenses. Favorable sales mix and reduced shutdown and severance costs also contributed to the improvement in net income and profit margins on a year-to-date basis. The company's financial documents indicate that it is generating positive operating cash flow. Despite a decrease from $138.6 million in 2024 to $92.9 million in 2025, the net cash provided by operating activities remains positive, suggesting a stable financial performance. This indicates that the company has sufficient funds to meet its operational needs and invest in growth initiatives. The company's debt level has remained relatively stable over the past year, despite a slight decrease from $700 million to $693.1 million. This change is not considered significant. Furthermore, interest expenses have also shown no substantial variation, indicating that the company's financial obligations remain manageable and consistent. Management's outlook on company strategy. The company is anticipating a stable financial performance despite potential quarterly variability. Research and development spending will be influenced by clinical trial results and reimbursement availability. The company has identified two key segments, commercial products and MCM products, with a focus on adjusted gross margin. Additionally, management plans to opportunistically repurchase up to $30 million in senior unsecured notes. Overall, the company aims to sustain its operations through a combination of existing cash, product sales, development contracts, and debt financing. Acquisitions and divestitures overview. The company has made several strategic acquisitions and divestitures in recent years. Notable acquisitions include the exclusive commercial rights for product sales and marketing obtained from Hikma Pharmaceuticals Inc. On January 14, 2025. On the other hand, the company has divested various assets to optimize its operations. Key divestitures include sale of travel health business to Bavarian Nordic, $270.2 million, RSDL business sold to Serb Pharmaceuticals, $75 million plus $5 million milestone payment, Baltimore Bayview facility sold to Syngene International for $36.5 million, drug product facility in Baltimore Camden sold to Bora for $35 million. These transactions demonstrate the company's efforts to streamline its operations, reduce costs, and focus on core business areas. The company has made significant investments in share buybacks over the past year. With two separate programs, totaling $63.3 million, they have repurchased a substantial 6.8 million shares. This strategic move demonstrates their commitment to returning value to shareholders and potentially increasing earnings per share. Concerns about inventory buildup or supply chain disruption are evident in the financial summary. The company has a significant amount of long-term assets related to inventory, totaling $152.7 million as of December 31, 2022. Additionally, there have been write-downs and provisions for inventory step-ups, indicating potential issues with inventory levels. The utilization of available manufacturing capacity affects cost of product sales, suggesting that the company may be struggling to manage its production levels. Furthermore, lower inventory reserves for raxibacumab and decreased shutdown and severance costs suggest reduced production levels or supply chain disruptions. These concerns are reflected in the fluctuations in inventory step-up provisions, which have increased by 50% compared to the previous year. The decrease in cost of sales also indicates potential issues with inventory management. Overall, these factors raise concerns about inventory buildup or supply chain disruption. That concludes the financial summary for Emergent BIOSOLUTIONS INC. Feel free to comment below, and I will be happy to answer them when possible.